এই সমস্যা আছে। আমি মধ্যখান থেকে একটা ঘন্টা আমি বের করতে হবে, তুমি একটা ঘন্টা যে কোনো টাইম তুমি বলো, আমি সেই টাইমটা ফ্রি রেখে দেবো। ঠিক আছে, সেরকম হলে রাহুলকেও তুমি করে নাও। তাহলে আমরা রাহুলও আসবে, আমরা দুজনে দুখানা চারখানা করে দেবো, তুমি তোমার মতো করে রিলিজ করো। Hello all, welcome to today's session. Today we are going to cover a very interesting topic, that is how to carry forward and set off your loss from the previous year in this year's income tax return. We are in the middle of income tax return filing season, and many of us actually have multiple sources of income. Now, based on the volatility of the market on anything, there is a possibility in earlier years you have suffered a losses. Now, what is the use of these losses? We are going to understand that, and how yesteryear losses can save you some amount of taxes in this year. That is also what we are going to understand and discuss. My name is C.A. Shoikat Roy, and I have been part of Clear for last 4.5 years. I presently handle the internal tax team. My area of expertise are income taxes and international taxation. Now, before going ahead, let's try to understand what are the losses and how is it impacting our tax computation. Now, there are essence. So in essence, losses are in case if you are selling something at a price which is lesser than the price you have paid to acquire that. In simple terms, that is called losses. Now, losses can occur for multiple sources. It can be a business loss, it can be a capital loss, it can be a loss from house property. This loss, that house property loss, this is the loss we are most acquainted with. So lot many of us has taken a home loan, and for self-occupied home loan, the amount of interest that you are paying, that is treated as loss from house property. So we are going to go into the details of how these losses, etc are there. So let's tackle the loss one by one. Firstly, loss from house property. Again, this is the most common loss. Now, loss from house property is nothing but the interest you have paid for the home loan. It is the interest on home loan is claimed under section 24, right? And this can be used to set off against salary income, business professional income, other sources income, etc. Now, for self-occupied house property, the loss maximum amount of interest that can be claimed is 2 lakh rupees, right? For example, if you have paid 2,37,000 rupees of interest during the year 22-23, out of that only 2 lakh rupees will be used to set off against any other heads of income, be it salary, be it profit and loss from businesses, etc. Now, this home loan loss cannot be carried forward if it is a self-occupied property, right? So you have the option to set off against any other heads of income, but it cannot be carried forward, remaining losses. Now, next comes your capital losses. Now, capital loss is if you are selling off a capital asset, if you are selling off a capital asset at a price that is lesser than the cost of acquisition, the price you have paid for that asset. So there are multiple instances that can happen, right? For shares, again, you sold it at a loss, or for property. Now, this is very interesting thing, because for property we have seen losses, seemingly losses are occurring due to indexation. Now, if a house property, a flat or anything of that sort is sold after 24 months, then you will be able to take the benefit of indexation, that is cost of half liquid, right? So, to adjust the inflation, indexation points are assigned every year. So, due to which there might be a scenario wherein the cost of acquisition, the purchase price, becomes more than the selling price. In that case, loss can be carried forward, right? Firstly, we have to understand what is the treatment of capital losses. Now, in case of long-term capital losses, it can only be set off against long-term capital gains. Now, this is a point I would like to stress very much. Long-term capital loss can only be adjusted against long-term capital gains. Now, in case of house property, the loss, if it is there due to indexation, you can set off this long-term loss with any other long-term capital gain. Maybe you have some shares, you have sold some shares, right? And the gain is more than 1 lakh rupees. You have made a gain and the gain is more than 1 lakh rupees. This long-term loss on sale of building can be set off against gain you make on sale of shares, right? So long term loss can only be adjusted against long term gains. Now there is another type of gains or loss, that is short term. Now short term loss can be set off against short term capital gains and long term capital gains. So short term capital loss can be set off against short term capital gains as well as long term capital gains. Now, in this scenario, let's assume I have sold, right? I have sold some shares, right, of an Indian entity, which I have held for a period less than 12 months, right? Let's say 10 months. Now, after this, after 10 months, whatever I have gotten is a loss. Say it's coming to 1 lakh rupees. I have sold a property, long term asset, and got a gain of 20 lakh rupees. So this 20 lakh rupees gain minus it will be reduced by 1 lakh rupees of short term capital losses. So my total long term gain will be 19 lakh rupees. I need to pay taxes on 19 lakh rupees. Now, there are some special characteristics of capital losses or losses in general, that is carrying it forward. To carry forward a loss, there is one criteria you must adhere to, that is, you need to be filing your income tax return before the due date. Right? If you are not filing your income tax return before the due date, you cannot carry forward the losses. Therefore, for individuals who have sold shares and they have suffered losses, if they want to carry forward this loss in future years, they must be filing their income tax return before 31st of July. If, however, audit is applicable for that person, then they get a little bit of relaxation, right? So we know for audit cases, the due date is normally September the 30th, right? So they still get, for people on whom tax audit is applicable, they still have another couple of months time off, even after the date of 31st of July. Also, partners of a partnership firm on which tax audit is applicable, for them also due date is extended till September. Now, there is another loss, another type of loss, that is business losses. Now, business losses can be categorized again further down in two terms: normal business losses, another speculation business losses. Now, normal business losses can be carried forward for 8 years. Speculation business loss can be set off against only, can be carried forward only up to 4 years. Business loss can be set off against any head of income except for salary, right? You can have some dividend income, and business loss can be used to set off against that dividend income, right? So you may have some uh, FD interest as well. Business loss can be used to reduce that FD interest income, right? However, Again, to carry forward this loss, you need to file your income tax return within the due date of filing income tax return, right? And finally, uh, apart from capital loss and business loss and house property loss, there is another losses there, that is speculation business losses, that is loss from lottery, gambling, etc., etc. Now this loss can only be used to set off gains against that particular head. So if you have speculation gain, then only speculation loss can be used to set off that speculation gain. And speculation loss can only be carried forward up till 8 years. All the other losses, be it capital losses or business losses, normal business losses or house property losses, that can be carried forward for 8 consecutive years. So if you have filed the income tax return for assessment year 23, 24, from there onwards another 8 year you can carry forward this loss. Now let's see how this loss is applicable, how this loss is used. Now let's say in the year 2000, assessment year 22, 23, I have made a short term loss of, let's say, 1 lakh rupees. All right, short term loss of 1 lakh rupees, short term capital loss. Now this year I have a short term capital gains of 1.5 lakh rupees. Normally I would have to pay taxes at the rate of 15% on short term capital gain. We are talking about listed equity shares in India, right? So on 15 lakh 1.5 lakh rupees I would have paid taxes at the rate of 15%. However, since I have a carry forward loss of 1 lakh rupees, that 1 lakh rupees will be able to reduce my this year's capital gain, short term capital gains, by again 1 lakh rupees. And after the adjustment, my gain, my taxable short term capital gains will be 50,000 rupees. And on that 50,000 rupees, I need to pay tax at the rate of 15%, which is 7.5 thousand rupees. Otherwise I would have to pay taxes around 21,000 rupees, right? Now this actually gives me a very big tax planning opportunity, right? So I must be having some sort of loss that I can carry forward, and in future years if I have any profit I will be able to reduce that profit by carrying forward this loss. Now this loss, again I cannot stress this point enough, that to carry the loss forward, you have to file your income tax return within the due date, right? Otherwise the it is not permissible. Now there is a conception that actually goes on to say that to carry forward the loss, I have to report losses in every year's filing. That is not the case. There is only one criteria to carry forward the loss, that is, you have to report the loss in your income tax return in the year of loss happening, that too within the due date. Right? Every year, if you want to carry forward the loss, there is nothing stopping you actually, and you should be doing that. But even if you are not doing it, even if you are forgetting it, there's nothing written in you can still you will still be able to carry this loss forward and set off this carry forward loss in the year of profit actually occurring. So this is how you will be able to carry forward the loss and set off the loss. And again, we are in the middle of tax filing season, and it goes on, and we at clear tax are striving to bring out the little tips and tricks of filing the income tax return so that you can save some amount in income taxes. Now I hope from this discussion you are able to grasp the concept of loss carry forward and setting the loss off. Now, if you have any question, I will be more than happy to take up those questions. Right. So if there is a loss on redemption or sale of NCD, firstly we have to determine whether this loss is a short-term loss or long-term loss. If it is a long-term loss, in that case you need to report the loss in the income tax return in this year's filing, right? And uh, in this year's filing, obviously. And if you have uh, any other losses, firstly, whatever the long term loss you have, that will be set off against the long term gains that you have during the year. Now, if after this set off, the same year set off is not possible, whatever the unexhausted losses are there, that will be carried forward up to 8 years. Now, that needs to be done by filing your income tax return before the due date, and whatever the loss is there you need to report it under schedule CG so that the loss can be captured, and whatever the gain is there, again it needs to be reported in schedule CG so that the gains can be captured. Right. So normally to carry forward the loss, if it is a capital gains or capital loss, my bad, then ITR 2 has to be filed because obviously you are getting the losses only on sale of or transfer of capital asset. Then ITR 2 form is required. If along with capital loss you have business losses as well, in that case ITR 3 will be applicable. We are strictly speaking about the individuals, right? So ITR 2 or ITR 3, depending on the nature of income you are having, needs to be filed. Right. We are going to file for losses, or rather report the losses in schedule CG, and if there is any losses, firstly it will be automatically flown in the schedule CYLA. Well, Rajiv, until and unless the loss is finalized, you cannot report the loss. That too, this loss cannot be claimed in the financial year 22-23's filing. If you have this loss, that will be happening in the financial year 23-24. And if you have any long-term capital gains or long-term, I'm presuming this is a long-term capital loss, any long-term capital gains you make during the financial year 23-24, you can set off this loss with that gain. If still the loss is unexhausted, it will be carried forward for 8 years. Yes, clear tax software can compute taxes from two brokers, two separate brokers. Uh, so you can upload the, so in ClearTax we do support a lot of brokers. So you can upload the broker statement one by one, capital gain statement one by one, and the loss will be captured. Yes, both the brokers are actually supported. However, you need to upload the appropriate capital gain statement. Don't worry, If you are not or if you are unable to download the appropriate statement, there is a guide attached to ClearTax portal so that you will be able to download the appropriate statement from the brokers. Follow that guide and you will be able to get the proper capital gain report. Right. So the bonus is actually forms part of salary, and there is no concept of loss under the head salary, right? And unfortunately, the point that you are trying to make is not possible because those two incidents actually have happened in two different financial years. Therefore, one financial year's salary cannot be offset with return salary of another financial year. Had this been the same financial year, there would not have been any problem whatsoever. Your employer would have taken care of this. But in this scenario, I'm really very sorry. There's nothing we can do because there is no, relief has been provided for this type of situation. Excuse me. Right. If you have any question, please drop those questions in the chat box. We are going to wait for another couple of minutes, and after that, we are going to call it a day. All right. So thank you all for joining with us. I hope you have a understanding of how to report the losses and carry forward the losses and set off the carry forward losses. Thank you again, and do stay with us so that you we can share our insights of tax return filing and nuances of taxes with you in timely manner. Thank you.